Have you heard of LMI? Lender's Mortgage Insurance. The first time I ever heard about this, I was like, I went into the bank, first time to get a loan, I think I was at Westpac Bank in Sydney, and I said, just inquired about how much I could borrow, and what costs were associated, and then they came out and said basically that I'd have to pay this other fee. And I was like, why? You know, that's your risk, not my risk. And I said, can you go and get the next person up and level with authority? And they came out and said, if you want the loan, you've got to pay mortgage insurance. That's just the way it is. So I was introduced to the concept of leverage, which I really didn't know about prior to that. And it's a very, very serious thing and something to treat very carefully. So just to give you a guideline, if you have the ability not to leverage, then it's fantastic. Like if you have 20% deposit because you've been saving really, really well, then do your 20% deposit and don't pay for it. If you've got equity in your home, you can do an equity release, set up a separate facility, a redraw or a line of credit, have those funds available and use equity for your 20% deposit and then borrow the other 80%. That's another way you cannot miss and not have to pay mortgage insurance. Mortgage insurance on average is 2% of the value of the loan at 90% and about 3% at 95%. So ultimately, even though I don't like debt, because we're not generally born with a silver spoon and no one's there to hand us a property, we can only save so much. So we need to have some other strategies, and hence why leverage is so important. Now, I kind of looked at this in the early days and thought, well, developers are out there building sky-rise apartments worth tens of millions of dollars and they don't put in a single cent. So how can we do that with residential property? And you can get into the market. I had some clients get in and they only start with $8,000. In six months they had their first property because we're able to put a plan together of how to get those funds together to meet the bank's criteria and get the lending. Of course, the income side's the other factor. But guys, leverage is really important if you want to go and invest, but it's also something to take very seriously and make sure you've got buffers in place to manage any worst case scenario, because you know, life has a funny thing of things popping up, and hopefully that's not your health or your job or your relationship, but things do change and you need to be prepared. So don't put yourself in a position when you don't have a fallback. But if you've got a good plan, leverage can be really useful to help you build a portfolio. And quite often, the way I've worked with clients is we've bought one property, we've generally made our money when we buy, and then within the next 1 to 2 years, we pull that equity out and do another purchase. Obviously, everyone's equity position is different. But guys, there's an art to building a portfolio. Leverage is important, and I've talked about how to capitalize LMI in another video, so have a listen to that. But join me in our 2% club. That is the skill of how to build a portfolio, not just go out there, buy a property and get a loan and hope it works out and then find you can't do much more after that. You've really got to build a plan right from the beginning. So if you like to learn more and develop your skills, that's what the Xylem Zone is all about. And I've got some great tools there at the moment and great downloads that can help you with that. So jump in, have a look at the group and start your learning. Thanks, guys.